Was really good, was really good. We back at it again. I know it's been a while since I put up a YouTube video, but quick little update since it's been a while. I had my end of month like 2, 3 weeks ago, finished with a 66% profit return and an 80% win rate overall within a month. Give all praise and all glory to God. Past 2 weeks, starting off the new month and the new year, have been 100% win rates. And then this week was a 70% win rate. Took, I think, 2 losses within the Discord within my option signals, which I put out and signal and stream for free. So go tap the Discord on the link. It's in the bio of the YouTube. You feel what I'm saying? But yeah, I give all praise and all glory to God. And like I mentioned, had a 66% return last month, had a 70% return 2 weeks ago, had a 30% return this week. You feel what I'm saying? So I give all praise and all glory to God. And amongst the main aspect, which is God being blessing me with the ability to do that with the profit returns and the numbers and et cetera, et cetera. What was also helpful was risk management. Okay. That's been a reoccurring topic that I've had this week, which is based on risk management. You feel what I'm saying? I have a lot more members, a lot more students, and a lot more like beginner students. And a lot of people are struggling with risk management, understanding risk management within options trading. Within options trading. Okay. And that's kind of what I want to go over. Essentially, I want to be able to help people, students, members, and anyone else who trade options get an understanding of at least what I do to manage my risk to be able to have profit returns like that, even if I have red days and multiple red days. Like I've had weeks where I've had 3 red days and only 2 green days, and guess what? I still finished with a 10% return at the end of the week. So, the way that I manage risk is just what I do. It doesn't mean that's what you have to do, but this is just how I do it and how I'm able to preserve more of my profit, more of my overall account balance, and be able to finish my weeks with these big profit returns and very little negative and red days, or at least very little losses within my red days. All right. But yeah, let's get straight to it. So before I go into the aspects of how you can manage risk, because there are 3 different aspects to basically, which is the common one, which everyone uses, and then what I personally use for myself. God was just blessed me with the idea, and I ended up coming up with it. But before we get to those aspects, I want to go over the basis of risk management. Okay, risk management is the process of managing your risk. You are managing how much you are losing compared to what you make on average. Therefore, you can end your weeks, days, and months and years positive and in profit. Otherwise, you finish negative or you finish neutral, break even, whatever, whatever. Think of a business, whether that's a restaurant, Target, Walmart, the way that they manage risks. So then, when the money that they lose doesn't keep them from making more money and finishing their days, weeks, months, years positive, is by understanding how many labor hours they're able to give to their workers. So then they're not losing too much money compared to what they will make on average within that week. Getting certain products that are either not buying and getting more of specific products that are going to make them more money and cost them more money because no one's buying them or more people are buying them. You feel what I'm saying? And then overall with, everything else. All businesses, trading itself, have a form of risk management because if you don't know how to manage your risk, you end up spending money, like you spend your money on contracts, like Walmart spends their money on their employees, and you end up spending too much money and you end up losing more money than what you make on average. And a lot of people fail to realize that. They fail to understand what they make on average has an influence towards their account balance and how much they should be allowing themselves to lose. And because they fail to realize that, they end up losing way more money than they should and way more money than they could have. And they could be finishing a lot more days and weeks and months positive, especially with big profit returns, if they would just understand specific aspects within options trading, risk management, because it's hard. You can consider it hard to manage risk within options trading. That's why a lot of people say, options trading is gambling, options trading is hard, it sucks. No, it's only gambling to those who are just buying these super big contracts to try to get rich quick and then they lose a crap ton of money. That's gambling. Even if you put in analysis, you're just buying these super big contracts and you're not putting any analysis into risk management. Therefore, you're just losing money. Anyone can analyze a freaking gambling deck of cards and be like, oh, this, that, and the third, and they're just throwing a bunch of money. They can make a lot, but then they can lose all of it. And that's what a lot of people do with an options trading. That's why they call it gambling. That's why they say it sucks. That, options trading sucks. I'm going to do this, that, and the third. when that's not the issue. The issue is that you don't understand risk management. And if you did, you'd be able to preserve more of those $400 profit days and only lose very little of what that profit was by the rest of the days and by the end of the week and the month, if you just understand how to manage risk properly within options trading. Otherwise, you have these really big $400, $1,000 days, and then the next day you end up losing $2,000. You feel what I'm saying? So, again, with that aspect, I just want to bring up the importance of understanding risk management, especially within the business realm. It is important if you want to be able to preserve more of your profit, especially if you have multiple red days. Because I've had days where, like I mentioned earlier, I've had days where weeks where I've had multiple. I had 3 red days one week and then 2 green days, and I still finished with a 10% profit return because I was able to manage my risk properly. Therefore, what I lost was not significant to what I made. You feel what I'm saying? And yeah, so these are the aspects of how you can manage risk within options trading. The first aspect is used in any form of asset classes with trading, which is only risking a certain percent of your account, whether that's 1, 2, 3, 4, or 5% of your account balance. That is the only money and the amount that you can risk. Meaning, let's say you got $1,000 in your account. What is 1% of $1,000? What is that, like $10? Something like that. That's like $10, whatever, whatever. Okay, you only risk $10 because it's gonna take 100 trades for you to lose that money. Or you can max it out. I would probably max it out at around 5%. You can only use $50 of your overall account balance, percent wise, which would be $50 of 1,000 is 5%. I mean, that's the only amount size of contract that you can buy and risk. You feel what I'm saying? And risk losing as well. And that's what most people use within any trading. Some people within options trading, they use that aspect as well. A lot of people don't, and that's why a lot of people fail within options trading is because they just kind of just buy these super big contracts and don't even take in the fact that they're using so much of their account balance and then hold their contracts when they're in the red, then they end up losing all of their account balance. You feel what I'm saying? But mainly, it's mainly like any trading asset outside of options trading usually uses that like 1 to 5% rule. But the way that I manage risk is still very similar to that 1 to 5% rule. And that's what I'm gonna go into right now. So there are 2 ways, which can technically speaking be confined into one, but I'm gonna make it into two. The first way and the main way that I manage risk within options trading, usually I use this aspect when it comes to when I'm scalping and I'm not doing positions like swing positions or overnight positions. But regardless, the way that I manage risk is by having a mental stop loss, a specific number that I do not allow myself to lose more than because of what I know that I make on average in my overall account balance. Because I know if I lose more than this specific number, that means I lose more or risk more or lose all of my profit that I will make on average, and I decrease my account balance significantly by exceeding a specific number. Now, that sounds like a handful, but it's really not. All you have to do is look at what you make on average. So let's say you're making $100 on average. You probably don't want to lose more than, let's say you say your account balance is at $1,000 and you make $100 on average. That means by the end of the week, if you were to take 1 trade a day, win every single trade, you should have made about $500. Okay. All right. So let's say you made that $100. You make 500 by the end of the week. Okay, and you have $1,000 in your account balance. You probably don't want to lose more than $20 because $20 isn't going to have any significance, and that's only 2% of your overall account balance if you look at it like that. And on top of that, it's not a whole lot of the money that you would make on average by the end of the week. Because if you look at it, if you only lose $20 a day and you take 1 trade a day, 5 trades by the end of the week, that's only $100. You lose $100 compared to $500. That's a 1 to 5 RR risk ratio by the end of the week. You risk a total of $100 if you were to lose 5 trades, 1 trade a day by the end of the week, and to make possibly $500 by the end of the week. You feel what I'm saying? Risk management. You feel me? You got to break it down into those aspects, So again, that stop loss based on your overall account balance, that's not a lot of risk. That's only 2%. That's only 2% of your overall account balance. If you're making 100 a day, you have 1,000 in your account, and your mental stop loss is $20. You feel what I'm saying? And You might be like, well, the contracts, the percent wise, how would you even know it gets to the $20, whatever, whatever? I look at the dollar amount. That's the second. Actually, I could probably break this into three things. So, amongst having a mental stop loss based on my account balance and what I make on average, the way that you have to make that mental stop loss, I'm sorry, the way that you set that mental stop loss is depending on where you trade options, they might allow you to have a way to like set stop losses or sell limits. But me personally, the way that I do it is when my contracts are in the red, I look at the dollar amount. And when my contracts are in the green, I look at the percent. Because if I'm looking at my contracts by the percent and it's in the red, not only am I going to want to throw myself off of a freaking bridge, but I'm also not going to understand how much I'm actually down. You feel what I'm saying? Compared to if I'm looking at the dollar amount when I'm in the red, okay, we're only losing a couple of bucks. We're fine. It said 20%, but we're only down $5. We're fine. You feel what I'm saying? And then when it gets to a certain number, you just sell it out. Okay, it's getting to that certain number. Project's gonna sell it out right now. Boom, get out of it. You're done. Simple as that. If you see a way you could possibly reposition, you could probably make it back because that stop loss isn't significant to what you make on average. $100 compared to $20, that's an $80 difference. You feel what I'm saying? If you're able to make 100 on average, that means you can easily make that $20 back to whatever extent that may be. You feel what I'm saying? And that's the importance of that. And then the third way that I manage risk, and this is related to swing positions and overnight positions, which is do not buy contracts you are not willing to lose. And especially do not buy contracts you are not willing to lose by looking at your overall account balance and making sure that's not going to affect that neither. All right. So if I'm doing an overnight position, I know very much if it goes in my favor, I can make a lot of money. Whether that's just by pre-market being all the way up and the market opens all the way up, but I also know I can lose a lot of money if pre-market and market opens all the way down or just dumps all the way out of my favor. You feel what I'm saying? Therefore, that same mental stop loss that you're going to sell your contracts out when you're in a trade is the same amount of money that you're going to risk on these overnight and swing positions. Because if it goes out of your favor, you lose that $20 because you make 100 on average. You lose that $20. But if it goes in your favor, you're still gonna make a lot of money. I've had $20 to $40 contracts jump up to freaking hundreds of dollars, $400, $300 within maybe an hour, if not less, especially overnight. You feel what I'm saying? So there's really no need to risk that much with those overnight positions. But I mean, if you have, enough money in your account balance overall and you make enough on average to where you can spend more on a contract and hold it overnight, whatever, meaning you can make more money, then by all means. But the point is, if your account balance is going to get significantly decreased by losing a specific number, which is also significant to the money that you make on average, you're not going to be able to preserve any money. You're not going to be able to make any money. You're just going to essentially lose money, and lose money. But those are the ways that I manage risk, which is all primarily, even though there was three aspects that went into how I manage risk, it all comes down to having a mental stop loss based on the profit that I make on average and my overall account balance. Similar to, again, the 1 to the 5% rule. I know what I make on average and I know what's in my account balance. Therefore, I'm making sure that I don't lose a specific number because I know if I exceed that specific number, not only do I risk losing more of my account balance and getting even closer to losing my entire account, but I also know I'm going to lose more, if not all of the profit that I will make on average, making it even harder to try to make your money back. Imagine if you make 100 a day on average and you lose, let's say, 120. You know how hard that's going to be to try and get that back because you have to try to sustain your emotions. It might not be hard to get the 120 back because you might make 100 the next day, but the issue is your emotions because now you're not focused on the trade. Now you're focused on making that $120 back. You feel me? But yeah, that's just how I do it. That's how I've been doing it since I started trading options. And I mean, it's worked wonderfully for me. It's been able to help me maximize my profits and minimize how much I lose. And especially if I have multiple losses within a week, I could still finish my weeks green. You feel what I'm saying? And, I already mentioned, my profit returns of just like recent numbers. You feel what I'm saying? Of recent numbers. A couple of months ago, I freaking 3x my overall account because I was able to manage my risk properly and maximize my profit and not lose so much of my profit. And I was able to end up, turning my account up 3x essentially. You feel what I'm saying? But yeah, that's the video. Hope that was helpful. Just trying to help some people out. Go type into the gram and the Discord. Do everything for free. God bless y'all.